Luke here from LAGFX, back today with another video. In today's video, we are going to go over the Great British Pound to the US dollar market. What I'm going to do is give you all a complete top-down analysis in hopes that you guys can use this information to profit in this market. This is a case study like video, so it will be in the case study playlist. Go and check out the other ones if you've not seen them. But yeah, my aim for this video is to give you guys plenty of areas and zones that you can look to potentially trade from and obviously implement and apply to your own charts. In doing so, I also want to show you guys exactly how I look to place positions and how I go about doing my top-down analysis. If you guys do go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. Now, without further ado, let's jump straight into today's video. Okay, so on screen you will see the Great British Pound to the US dollar market. This is on the 1 week time frame, so it's very scrunched out. This is just giving us data right the way back to 1972, so we can see the entirety of this market and how price has been playing out. Now, the reason why we want to look from the 1 week time frame and we want to really scrunch out and see everything is so we know what our bias is. We know which direction to trade in. It is very important that we always trade with the prevailed trend. So having a zoomed out version of this market will allow us to be able to find what our bias should be. So the most simplest way of looking at it and the most simplest way of understanding which way we should trade is looking where price started and where price currently is. So as we can see, just from this path tool that I've drawn out, price started up here and price evidently is down here. So we know that this is bearish market, okay? Now that is without even looking at the structure that has actually been put into this market. If we looked at this in a structural way, we can see that price has put in lower highs and lower lows. So price is currently looks to be putting in its next lower low. We can see clear bearish structure. So now that we understand what direction the market is going in, we understand what side we want to be on. We want to be looking for those sell positions. So again, what we can do is we can now go down to the daytime frame and we can look more at present time, okay? Looking more at present time will give us zones and areas to look out for when we are looking for these selling opportunities. So just looking at the 1 day time frame and zooming in, now looking at the data from 2015 right the way through to present time, we can see again that price is putting in clear bearish structure, providing us with those lower highs and lower lows. So again, that builds our bias that we are looking and we are trading in the right direction by placing sell positions. What we can do here as well is we can also mark out structural lows and highs within this market so we understand more clearly that we are following the laws of bearishness. So we will change the color of this to red. And again here. So you can see that the lows are highlighted in orange and the highs are highlighted in red, and we can see that every orange low that has been marked out is lower than the previous one, and every red high that has been marked out is lower than the previous one. So again, we are following clear bearish structure. Now, within bearishness, we have the creation of lower highs and lower lows. So when we look for opportunities to get involved in the next impulsive wave taking us lower, what we need to do is look at the previous impulsive wave that took the markets lower. So what we need to do is highlight this entire impulsive wave, because this was the last impulsive wave that took the market lower, and we need to find areas that have been left unmitigated and that need clearing in order for price to continue trading us lower in the market. We need to find areas that are basically holding enough supply that it's going to flip that supply and demand balance. It's going to conclude this current corrective wave, and we should see the creation of the next bearish one. So I have obviously marked out this zone here, reason being it is a last buy to sell region. We have a lot of inefficient structure that has been created below that, so we want to see price come up to clear all this inefficiency, but also to tap into this unmitigated area. Why? Because here is where a lot of supply will be being held and a lot of selling orders will be executed here. Now again, you might be wondering, well, why are people waiting to execute sell positions from here? Because this is a good price to do it. Why is it a good price to do it? Because it's at a higher value than price is currently at. So the higher up we can sell, the more we can profit from the downfall, okay? So there's a lot of selling orders that will be waiting to be executed here. Probably a lot of buy orders that will be closed around here in preparation for the selling orders to be executed, which again is only going to encourage price to then go on to put in that bearish impulsive wave. And as you can see, if the price does continue trading us higher, putting in that correction into this zone, we will still be delivered with the creation of lower highs and lower lows. So it is still following the overall structure and bias of this market. So with us now having a target, which is quite a distance away, we understand that the current direction of the market is bullish as it is putting in a corrective wave. So what we could do is we could look to buy into this market before we sell longer term. So what we would do in that case is we would look through this current corrective wave for any areas that have been left unmitigated, last sell to buy regions, and then we can obviously look to get involved in those demand zones. Now alternatively, we can look more fractally at previous structure and find areas where we can still get involved in scalp-like positions or shorter term sell positions through the corrections within the correction. So again, I have highlighted another last buy to sell region being here. Price has recently tapped into this, as you can see here, and we have been delivered with a break of structure. This being a structural low as it went on to set a new structural higher high. So when we saw the creation of a lower low being created, that is a break of structure, and this is also instigating the start of what could be some kind of bearishness. As we know, in bullish structure we have the creation of higher highs and higher lows. So when we start to see the creation of lower highs and lower lows, that indicates a break of structure, and that also indicates a reversal in trend. Now again, what we can do is we can go and mark any demand zones that we deem as valid. This here is a valid demand zone, as this is an unmitigated last sell to buy candle. Price has tapped into this, so we may see price actually go on now to create its next impulsive wave, taking us higher into that supply zone that we want price to actually tap into, or we could see a continuation in what looks to be bearishness. So what we could do in that case is look for any other last sell to buy regions. So again, we can do this by going down on time frames and finding any unmitigated candles that need to be cleared before we see the creation of the next higher time frame bullish corrective wave. I can see an unmitigated candle here. So again, what we could do is highlight this. Why is it unmitigated? Because price doesn't come back down to clear any of the liquidity that's in this candle, and we have a lot of inefficient structure sitting above it. So we can use this as a place to put our take profit target when we are looking to sell into this market. So what I'm doing here is I am just highlighting this demand zone, and I'm also going to put the increments so you guys can go ahead and mark it out for yourself. Okay, so now that we understand the overall direction of the market, which is clearly bearish, but we understand that the current trend in the market is bullish because it's putting in a corrective wave, we understand that we could look to buy before we sell longer term. There's no harm in doing that because the overall structure at the moment is actually bullish, so we could look to buy into this market first before we sell, but we have targets that we want price to reach. So I have a demand zone here that I want to see price reverse from, taking us higher into our higher time frame supply zone, where we will then be looking to sell longer term. Okay, now because we've got those two zones, we can also use that when we look to obviously sell into the market. Now you'll notice that when you go down on time frames and you are marking out these zones, you can create a story with what price is telling us. So again, I have highlighted, you'll see another last buy to sell region within this impulsive wave that took us lower into the market. Now this, as you can see, is here. This is a valid last buy to sell region, and what I am wanting to see price do is trade us up into this, deliver us with the confirmation we need in order to execute a position, and allow price to actually trade us lower. So we could now stretch our take profit target to as low as this demand zone here, as I do believe price will be trading us into this demand zone before taking us higher into the market, breaking these protected highs. So we want to see price tap into this, and then once price taps into that demand zone, we then want to see price actually trade us higher into the market, taking us into the higher time frame supply zone, where we can then look to actually sell in the market. So we could sell before we buy, before we sell. So ultimately, we have 3 trading opportunities that have been presented to us just from doing this top-down analysis. Now, why did I originally set my take profit target just above this last structural low? Because by doing that, we are guaranteeing that our take profit is going to be achieved every single time. Why? Because we understand that fractally, price is putting in bearishness. So realistically, within bearishness, we have the creation of lower highs and lower lows. So we understand that every low gets broken from the creation of a new low. So this low should get broken with the creation of a new low. So realistically, setting our take profit target here guarantees that our take profit is going to be achieved. But now that we understand the higher time frame bias, and we understand that price realistically needs to trade into this zone before taking the markets higher, breaking these protected highs here, we could actually stretch our take profit as low as this. Now this would allow us a great risk to reward return, which is very much achievable. Now again, once price has tapped us into this demand zone, we then want to see price trade us higher into this supply zone. So when we close those sell positions around here, we can't actually look to buy into this market, having our stop loss below the zone that's created, and our take profit would be set at this supply zone. Then, as you can imagine, once price taps into this supply zone, we will then be looking to sell into this market, as we would then be following the overall structure of this market. So we can sell before we buy, before we sell. And we have been able to develop this story, and we understand these zones just by doing a full top-down analysis, going from the weekly to the daily to the 1 hour. Now we're looking at the 30-minute. We could even go down as low as the 5 and 15-minute, where we found this potential sell zone to actually sell into the market. But all we did is we looked within the last impulsive wave for any unmitigated areas. We found one, and now we're just waiting for price to trade into it before taking us lower into this market. So what I want you guys to do, I want you to highlight this zone out for yourself now. This is on the 5-minute time frame, so just look at the last buy to sell candle before this big move down. Highlight this zone out for yourself. The increments are here. You can set your take profit target just above this last structural low if you wanted to. If you wanted to stretch it further, you could have it as low as this, which is 1.1934. So again, pause the video and highlight this out for yourself. This is what we're looking for in terms of price. Again, highlight this zone out as well. So if we just go back onto the higher time frames. This is on the 30-minute time frame, so you can look at it on the 30-minute time frame. It is visible on the 30-minute, this last sell to buy region. So highlight this demand zone out for yourself. This is valid. This is somewhere we can look to potentially buy from. Again, highlight the zone and put the increments in. And then finally, we just go to the 4-hour time frame, mark this out as well, because this is definitely a valid supply zone. So mark this entire last buy to sell region out on the 4-hour time frames and wait for price to trade us into this, where we can then look to sell longer term, taking us lower into the market, breaking the last structural low. And you best believe that is going to be a very, very large trade, which will offer us with some amazing returns. So with those 3 zones highlighted, you should have the opportunity to now place 3 positions within this market. Now, I hope this video makes sense. I hope you've been able to learn a thing or two, and I hope you guys have been able to actually highlight some zones and areas out for yourself that you can now go and use to further build your bias and your analysis, and hopefully profit with me and the LAGFX team over the course of the next few weeks. I didn't want this video to be too long, but I wanted to provide enough content that you guys actually found value within it. So hopefully you guys have kind of gained a better understanding on how I look to analyze the markets and what I look for. I simply look at structural laws within the market, and I look at supply and demand zones. It's as simple as that. I wait for further confirmation through breaks of structure, so through structure breaking to the opposite side, and I get involved in those reversals, okay? I always make sure that I'm trading with the current prevailed trend, as this is another thing to add to our bias and our confluence, and it just ensures that we have more probability of being profitable with those positions that we are placing. Now, if you guys aren't involved in the Learning Lounge group chat, I highly recommend it, as we have loads of educational content on there, and we also update clients with regular analysis as well as potential entries. So if you're not involved, head down to the description below and get yourself involved. Now, I hope you guys have enjoyed this video today. If you have done and you want to see more case studies where I highlight zones and areas that you guys can use to potentially trade from, then let me know. Put it in the comments below and I'll make sure to get some more videos done. Also, leave suggestions on markets that you want to see me analyze, and I'll be sure to do that as well. Now, thank you guys for watching, and I'll see you in the next one.